I think silver is a bit of a lotto ticket, and all of a sudden it gets to $30, $35, $40, $50. These are not out of the question by any means.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Phil Streible, the Chief Market Strategist at Blue Line Futures. Phil, thank you so much for joining us today.
Thanks for having me.
Definitely. Now, we've seen a week, this last week was pretty volatile for all the markets. Do you want to give us a rundown on what you're looking at right now when it comes to, this volatility that we've been seeing?
So the volatility in the U.S. equities, it's kind of comprised under two different structures at the moment. The NASDAQ volatility is the one that is really kind of weighing in on the market. And if you look at it numbers wise, first of all, Janet Yellen, she is credited with having the lowest volatility index of all time in U.S. equities. I think it was closer to like 14 on the S&P. And with that, it was a steady grind higher in equities, not much volatility at all. And I do anticipate that, as that administration gets settled in and everything else, we get a couple Fed meetings behind us that will come back down to that lower volatility. But right now what we're seeing is this range where we go from 20 and below, which is extremely calm, and we tend to get there in the S&P and in these other stock indices, throughout the week, and then we end up spiking up to about 30. And it's a difference between, imagine you're in a boat and you're sailing and it's completely calm waters, that's your 20 and below. Very easy to sail, very easy to, drive a boat around and everything else. And then all of a sudden we go to 30 and above, and that tends to be hurricane and gale force winds, which doesn't work well for U.S. equities, and everything gets thrown out with that. And that's why we're having these massive gyrations right now. It's merely a spike in volatility, and these spikes are not trending. They're just tend to be repositioning in the market. So huge spike up, market goes crazy, everything sells off, people get very nervous, they sell everything, and then things calm back down, and then they step back into the market. So that's what the gyrations that are happening right now.
When we do look at the stock market, it's interesting that, you mentioned how the NASDAQ is selling off, but we're seeing other indices skyrocket, right? The Dow hitting pretty much an all-time high today. So what is your perspective on that? Why we're seeing that difference? Normally those correlate pretty closely.
Yeah, the NASDAQ was more of a momentum play, all right? It was the stay-at-home. All those stocks, many of the stocks comprised within the NASDAQ had outperformed month over month, quarter over quarter numbers. The sales were through the roof. I mean, everyone was going out and they were buying Logitech cameras and our microphones and monitors and things like that, and all these other products that were stay-at-home products. All that went through the roof. And that's why the NASDAQ had greatly outperformed. Now, the environment is slightly changing, and the environment is a reopening structure and a rising interest rate structure. So what happens is those numbers within the NASDAQ, they start to compress. So that's why the NASDAQ is kind of signaling lower. It is selling off. Any spike up you get, people are trying to exit those positions, and it's correcting. Now, the other stock indices, they're comprised of many energy-related financials, industrials, and basic materials. And those are all starting to, as the reopening occurs, as interest rates goes higher, remember that greatly impacts the financials, who hold a lot of money in storage, have a lot of their businesses. They make all their profits around rising interest rates. They have that environment, so financials go up. Energies are going up because the demand is picking up because people are starting to travel, things like that. They get vaccinated, less cases. So energy stocks, those start to outperform, as well as the price of crude oil. So that's why these other stock indices, specifically like the Dow and the Russell, are doing much better than things like the Qs, which are selling off.
Now, when it comes to precious metals, a lot of people are pointing to rising rates, as you mentioned, also positive job numbers from February, and we're seeing the dollar rise as well. Other people are skeptical and saying it's the fundamentals for precious metals couldn't be better than they are right now. So what is your perspective why we're seeing this volatility and really this sell-off in metals this past week?
So the metals I really like to break up between, you have gold and then you have the other metals, and silver is in with the other metals. The problem is that silver and gold are often closely correlated and connected just because of the particular person who trades them in tandem, exits them in tandem. So that's why silver has a difficult time breaking away. Interest rates have been rising, and interest rates, especially on the 10-year and the 30-year, could go substantially higher, as they were when you look at like 2018 when rates were at their highest level. You look at gold, inversely, was down at 1150. So realistically, gold could see another $150, $200 correction. And I know gold investors, they don't want to hear that, because they can, but they should understand that it is possible. And it has nothing really to do with any kind of conspiracy theories or anything else. It's just because gold works inversely to interest rates. So when you look back in 2018, in right around August, October, that was the high in GDP, high in interest rates, jobs were skyrocketing, and gold was at 1150. Since then, the business cycle had peaked. You come around to COVID, you have the crash, you have all the money printing, you have low interest rates, negative rates on the real rates, and you have all the bullish scenario that it can get. Goes up to 2100, makes an all-time high. Since then, rates have been rising, and it was around August is when they had hit their bottom. Look at the 10-year, 0.4%. Since then, it's been rising, and that will weigh in on gold prices. So the gold as itself has that as its big challenge. You look at the other metals, though, basic materials, I think like copper, platinum, palladium, silver, rhodium, all the other base metals, tin, zinc, lead, everything out there, steel, I think all are in bullish cycles, and they should continue to cycle higher. Again, silver only problem, connection to gold.
You mentioned how gold we could see a sell off as large as $200. So they'll put gold around the 1,500, maybe a little below that. Where do you see that silver could fall?
Okay, and the number 2 was just arbitrary. It was just me shooting from the cuff. It's really, gold prices are going to stop going down when yields stop going up. So, and there's no telling, how high yields are going to go. There is a spot where they will stop going up, and that is the price where gold will go down. So silver, on the other hand, though, the thing about silver is that, anywhere when you get into the low 20s and even like the teens, people look at it as long-term. It's cheap for whatever that reason is. They start accumulating coins. You can look at many of the people that sell coins are all sold out. They sell at incredible premiums. So there is this underlying floor on silver that I think has come up substantially over the years. So I think mid-20s, to low 20s, I think is great value. I don't necessarily see that we'll get below, into the teens again. So I think that there is this parachute that silver has, and it hits the ground somewhere because of demand and increased demand from other areas, green energy, things like that, not only investment demand, industrial demand, whatever. Upside, I think silver has got 2 things. I think it's going to draft higher because you can look at the gold-silver ratio, which continues to break down. So it is rallying. It's not rallying at the speed that most people want. And, it's understandable. But I think silver is a bit of a lotto ticket, and all of a sudden it gets to $30, $35, $40, $50. These are not out of the question by any means. So I don't have a specific price target on the upside, but I think that the green shoots, and when you see these silver squeezes, you got to let a little bit go. That's all it is. Take profits up at somewhere.
That kind of presents an interesting opportunity for silver, right? You're saying that, at least in your perspective, the downside potential probably not going to go below 20 or stay there for that long. But then the upside potential is quite a lot, it seems like.
Yeah, it definitely is. I think silver prices could easily double from where they're at. I think that's without a question. I think that we'll see it. The problem is that we see it every so many years. You get these squeezes that occur. Now, the demand for silver is continuing to slowly build, and it continues to build, and the uses build, and everything else, investment demand, again, industrial demand, all the way down to, using silver for medical purpose and everything. All these demand structures are there that are lifting silver prices gradually. But you'll get these periods of shocks where there's not a lot of supply and the demand all of a sudden, it's mainly the investment demand comes in and you get these like $35 spikes, $40 spikes, things like that. You need to be able to, a person needs to be able to let some of it go at that area, build some capital, wait for these pullbacks. I just don't see silver going bam to $1,000 and you missed it. It's not like a Tesla stock or like something like that. It's shocks and you need to take advantage of.
Yeah, there was a key distinction that I was hearing when we saw this SilverSqueeze right back at the beginning of February, a distinction between silver and, for example, GameStop, right? GameStop is a stock, silver is a commodity. So you can see spikes in silver, but they're not going to be the same kind that you could see in a stock. Is that kind of what you're saying?
So looking at the very two, GameStop versus silver, where we saw, these short squeezes occur and one had continued to go up, GameStop, and also hold these levels where silver is more of this shock that went up and down. The differential between the two, and I don't think you can compare them, as asset classes that have very similar characteristics. That underlying thesis, the short squeeze it was both there. However, GameStop was able to fire their CFO. They were able to rebalance their board of directors. They're able to issue stock, things like that, and create a very valid business structure. Well, silver, in order for it to change the structure, would need to have different investment demand, different demand uses, different supply crunches. So it would need to have, maybe some new innovation that requires more and things like that. What I'm saying is silver's unable to innovate itself in as ease as GameStop is. So I think that they're two completely different ideas. I think that if silver all of a sudden had some new medical purposes, new green solar, energy type plays or new innovations that could create more of this validation, then you might have the trajectory that something like a GameStop would have.
No, some people are looking at the stimulus bill that passed the Senate and it looks like it's going to pass the House and get signed. So, and they're saying, well, this is inflationary, right? It seems like this is all inflationary, but we're seeing the dollar rise, we're seeing rates go up, and this is putting pressure on metals. So what do you think is happening right now? Why isn't this stimulus making people think that inflation is coming?
Okay, so inflation hasn't been coming. It's been coming for probably the last the last half year. We've seen it in lumber, we've seen it in copper, crude oil prices, gasoline prices, food prices, soybean oil, corn, beans, wheat, they've all gone through the roof. So inflation is here. People are going to realize it. Go to the gas pump. As soon as they start driving, they're going to realize, especially living in Chicago, you're going to see $4 and $5 gas, most likely this summer. And then the price of going to any restaurant or your grocery bill, they've all gone up. So inflation's here. It's not felt in gold because of the fact that gold works inversely to treasury yields. So treasury yields rise when inflation rises. So gold has not actually been a great way to play rising inflation at all. Gold performs well when you have stagflation, no growth in rising inflation, because when you have no growth, then the prices of things like oil and like all these basic commodities, they don't go up and gold goes up. That's its best play is in stagflation. The stimulus bill that passed, where that's going to be felt once people get these $1,400 checks, they're going to parlay that into paying their basic bills, and then they're going to go back into the stock market. That's why I believe that U.S. equities will continue to make new highs. They're not going to park it into the gold market. They might go into Bitcoin or something else, maybe even silver, but gold is too valuable for that. It won't even buy the bill won't buy even 1 ounce of gold with where it's at. So people don't see that as a viable play given their $1,400 stimulus.
Are you bullish at all for gold, or is it mainly just silver you're bullish on right now?
Silver, copper, platinum, those are the ones that I'm really bullish on. Even some palladium, not gold whatsoever. Gold, it'll have its day though. Don't get me wrong. You fast forward to the second half of the year, I'm going to be saying we need to be buying gold. We need to be selling these other asset classes because I believe that's where we get a stagflation that occurs.
All right. Well, Phil Streible, thank you so much for joining us today. If people are interested in hearing more of these interviews, they can hit the subscribe button and the bell icon. And before we let you go, Phil, would you like to share with the viewers any last thoughts you had, and where can people find you online?
Yeah, you can find us on at www.bluelinefutures.com. And we always encourage people to register. We have a free 2-week trial of our newsletter. There's no strings attached, no obligations. You'll get a lot of coverage on the metals, the energies, and some of the other markets that we discussed here.
All right. Once again, Phil, thank you so much for your time, and God bless.
Thank you.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.